For generations, Australians assumed they'd retire in their own home. It was the cornerstone of our national dream. But new evidence from the HILDA survey showed that that dream's slowly slipping away, and with it, a safety net for secure retirement. Today, 2 in 3 retirees who rent privately are living in poverty, and the wealth gap between homeowners and renters in retirement is only widening. Hi, I'm Michael Yardney, and welcome to the Demographics Decoded podcast, where I'm joined by leading demographer Simon Kuestenmacher, and we explore the trends shaping our futures. And Simon, today I'd like to discuss things that are not only for those who've retired or are planning to retire soon. Simon, I'd like our discussion today to be for every Australian who wants to enjoy their golden years.
That's it. We're very inclusive here, but the goal is to actually understand a couple of major basic housing related issues in retirement well before you retire, because once you hit retirement, that might just be a tad late.
Sure, I want to explore why the system's breaking down and what it means for younger Australians. So you're right, you can't just flick the switch close to retirement years. And maybe we could even talk about whether retirement policies are keeping up with this new reality. Look, this came from the HILDA survey, which in the past gave us a lot of data. It's a little bit more restricted at the moment. But what are your thoughts about this HILDA survey and about the stark wealth divide that has become evident?
First and foremost, what is the HILDA survey? It sounds like you're just asking your Aunt Hilda about anything. That's very much not what
Well,
it is.
that's a good German name, Simon, isn't it?
This is why I always feel like it's an auntie's name, but it is short for the Household Income and Labor Dynamics in Australia survey. Really, they forced this acronym onto this survey. But so it's Household Income Labor. That's what this is all about. And it's a household-based survey. So you ask for household incomes, household behavior. It's a panel study. So that means you collect information about the well-being and economic stuff of this cohort, but you ask the same people again and again. So every couple of years when you run the survey again, you ask the same folks. So
it's a longitudinal study, which I find interesting.
Exactly, which is wonderful. Like just having access to longitudinal data is fantastic. That said, bit critical of the HILDA folks at the moment because they are not publishing the raw data as generously as they did in the past. So that's my main criticism for those fellas.
So with regard to that, the wealth divide, what was your feeling when you heard about the widening wealth divide in retirement?
Yeah, it's not good. Probably a bit worse than I hoped for, expected. So the general takeaway is quite simple. In retirement, please do not rely on just your superannuation nest egg. That's probably not enough. The best protection to avoid poverty in old age is to own a property or to own the property that you live in. That's what you want, because ultimately your superannuation savings probably aren't enough to pay for constantly increasing rents each month. So that's a problem, because you might have a high income in the past and you throw 30%, 40% of that onto your rental accommodation. That's fine while you draw an income. Once you don't draw an income and you only draw superannuation, your superannuation income, which will be less than what your income was, then quite quickly you can run into troubles, particularly if you intend to live long.
You can't count on the pension either. Who knows what the pension is going to be, if the government can even afford it? Because in previous episodes of Demographics Decoded, we've explained how Australia's population is aging, how more people are going to live longer, but they're going to need healthcare, they're going to need medical services, and the government has to pay for that. I think that's another reason why we're going to keep having strong immigration, because we're going to need more taxpayers to pay. Well, one of two things. We're either going to have to increase taxes, and nobody wants that, or we're going to need more people paying taxes to pay for the care for our elderly population.
Absolutely. It's guaranteed that the government as a beast needs to have income. The income that it needs to collect needs to increase in one way or another as you get older. And so that is the exact wrong time to minimize the worker pool by shrinking or lowering the migration intake. 52 to 54% of our federal income is income tax. So that is rough to cancel this. So we'll probably have this, but still, from the perspective of the individual aging person, we go, okay, so I want to make sure that I have enough money into superannuation because that's the dollar amount that I have available every day, every month to spend on my lifestyle. That's fine. I want this to be as high as possible, but I also want to minimize the costs that I have every month. Housing is the one unnegotiable, and healthcare. So with housing, I want to make sure that I drive housing costs down. The housing costs on a given month for somebody who owns the house outright are tiny. That is about 1%, or you know the numbers better than me, is about 1% of your house value each year that you need to spend on renovations and upkeep and taxes and whatever it is. The dollar amount is much higher if you rent.
Definitely. But the headlines are brutal then. It actually says that 2 in 3 retirees who rent, they're living in poverty.
Yes, and so of course this is what is poverty is a big discussion. So usually this is if you're spending more than 40% of your income on housing, you are in housing poverty or whatever it's called. But that's too much because then the superannuation or the pension money that you have is too small to actually live a decent, chilled retirement. And you don't want that. So the idea is have some sort of property in retirement. I don't care if you are working if you don't have a house, but somehow arrange for owning a house outright once you retire.
But interestingly, the statistics show that the share of retirees renting has doubled from 6% to 12%. 12% of people retiring over the last couple of decades now, it's increased that level. 12% of those who are retired don't own a home, Simon.
Yep. And I can tell you where this number is going. This number is going to grow. That is all but a given because each year that we send into retirement has a slightly lower home ownership rate, which means even in retirement, a house, which then means, well, money is a bit tight for them. That, of course, then raises a couple of questions. How do we help those people out? What kind of rent assistance packages do we offer them? Do we start building housing that is specifically targeting this cohort? I'm not convinced that either of those things will happen, but these are levers that we could pull to help the relatively low income earning and housing poor elderly.
Interestingly, migration may play a bit of a role in this as well, Simon. Many first-generation migrants don't have intergenerational housing wealth to lean on.
That's true. Absolutely. So the intergenerational stuff, that of course helps you massively, but poor people don't have that because their parents always rented.
Yes.
And of course, migrants didn't have this because they were the first people to come here. And if your parents, they die overseas, even if you inherit a bit of money there, you burn a lot of money in the process. And probably if your parents came from a poorer country, the inheritance won't be nearly as attractive as if you inherit part of a middle suburb home in Sydney. That's much more lucrative than
Really?
some small hut in Indian village or a small house or apartment in Ankara.
Interesting. Now, I know you're a fan of Australia's superannuation system, and people working today are getting 12% of their income put away for superannuation. But a lot of those who are currently retired, there wasn't compulsory superannuation for many of their working years. And I remember those ads that used to be on television. I don't know if they're still there. This person was retired with $300,000, but this person was an industry fund, so their superannuation was $400,000. It's not enough to see you through. The HILDA report showed that those who are renting often have lower superannuation balances.
Yes, but that statistic, renters have lower super than homeowners. That's part of I'm not sure how logical this argument is. Oh, it's very logical, but how useful it is. Because, of course, the richer you are, the more likely you were to buy a house in the beginning. And so the
Makes
higher
sense.
your income was. And so then you throw this money into your super and so forth. But it just shows it's a bit of a double insult, if you will, for the people who do not own a house, who have lower super balances. Because
Yes.
they go,
Home ownership used to be nearly universal amongst older Australians. Its decline seems to be inevitable, as you're suggesting now.
yeah, it is going to continue like this. And so you then go in a very longitudinal sense as a government, how do we counteract this. And so the first bit then is, well, we would want to drive up home ownership rates amongst young people. Then you go, well, how do we drive up home ownership rates? That would mean, well, either we give people more money, or we drive house prices down. So these two things are your levers. We'll see what you are doing as a government. At the moment, I don't see anything that is driving house prices down. I see house prices go up. Wages are going up, not as much as house prices are going up. So that leads to more unaffordability, which to me tells me that the home ownership rate should go down. This is the age-related home ownership rate.
Yes.
We discussed this as well. The home ownership rate in the next 10 years will go up. And so please do not confuse this with housing becoming more affordable. This is just us pushing the big millennial cohort from the 20s into the 30s, into the 40s. And so we move them out of the rental stage of the home of the life cycle into the homeownership stage of the life cycle. So the overall national homeownership rate is almost guaranteed to go up, but the age-related homeownership rate is going to go down. This can be confusing, statistically speaking. I hope it does make sense. But so that's the idea. Housing must become cheaper if you want to avoid poverty in old age. Ideally, this happens rather quickly because this baby boomer cohort is rather big that is now moving into retirement. Let's say we get through the boomers all right, even if there is a bit of suffering at the bottom end of the boomer retirement thing. This doesn't mean we need to stop, because at some point the millennial cohort is going to retire. And that is a beast of a generation. So they, of course, turn 80 in the 2060s. And so by then, this system must be transformed and must be fixed, because so far, these millennials in their 40s have a heaps lower homeownership rate than the previous generations did at their time. And you translate this into what poverty in old age might look like, and that's not going to be fun.
Well, we're talking at the moment more about poverty in old age and home ownership in old age. But if you're new to this podcast, if you're listening or watching Simon and me for the first time, please subscribe or follow, depending upon whichever app you're listening to there. And also go back to previous shows, because we've spent quite a bit of time talking about various generations, what's ahead for them, what home ownership rates are, what some of the challenges are, but more importantly, looking at the positive side, what's ahead for Australia and what's good about living in Australia. So go back to each of our previous podcasts where there's some lessons about the trends that are going to shape your future. But Simon, we know that only last month the government's first home owner incentives have come in to try and help first home buyers buy a property. Now lowered the barrier of entry. People can get in with a 5% deposit and basically buy a median price home up to $1.5 million in Sydney, $1 million in Brisbane, $950,000 in Big Melbourne or Victoria in general. So they're actually pushing people up to medium price houses, not just the lower quartile, if they've got the serviceability. The suggestion is 70,000 people are likely, first-home buyers are likely to use this scheme in the first year. But Simon, to me, that's going to get the one round of people through. But increasing demand without supply is just going to push prices up for the next level. It's kicking the can down the road.
That's exactly what it is. To me, this is a bizarre policy because it does just that. It's short-term gain. In a sense, you buy the goodwill of 70,000 people or whatever, how many people it is that get that in the instance. But of course, you're driving up the price of the asset. And all the while, by the way, you take the risk. So the government guarantees the mortgage. So that means the government de-risks the banks. The banks in Australia are the easiest business model on the planet. They don't take on any risks to begin with. And now you're de-risking their mortgages. It makes no sense to me that the government needs to be the guarantor of those mortgages. And all the while now, just if you think about this systemically, now that the government keeps essentially guaranteeing a bigger number of mortgages, the government well and truly wants house prices not to fall, because they are part owner of this or guarantor of this property. So you make the idea that house prices fall absolutely ridiculous, which then in turn means a couple of decades down the road, the low income earning cohorts will most certainly not own a home in retirement. So you need to deal with this poverty and old age story yet again, unless, of course, you were magically, as a government, building social housing for pensioners, pensioner housing at scale. at the moment, they're not doing that either.
Well, a lot of other countries in the world are, aren't they, Simon? We're not.
No, and our social housing stock keeps shrinking and shrinking. So if you think about this, we have less than 4% of all housing is social in Australia. It should be at the very least 10%, probably closer to 12 or 15%. But so let's say 10. That, of course, means that if you want to move towards this 10%, each year of the additional housing stock that you add to Australia, more than the existing share needs to be social. And that's not the case. So what are we doing? We are building this, we're making this harder for the lowest income earners.
Now, the government isn't building social housing, but they've got a Commonwealth Rent Assistance Scheme, which is a fortnightly non-taxable payment to help eligible people receive social security payment. People who are getting social security payments such as Centrelink, they're getting a little bit of addition to help the cost of renting in the private market. So this isn't for people in public housing, private rental, where most of these people are. They're getting a little bit. Is it enough?
No, it's not enough. But even this
I knew the answer, by the way.
Yeah, of course you do. Of course you do. Everyone knows. And so the idea is that this little bit of money, first and foremost, it doesn't really help. Of course, it helps rather than hurts the individual person who receives it. That's clear. But of course, you give money to a cohort that doesn't have it, which then again drives up the price for the rent, by the way, in the system. But also because the rent assistance isn't increased at the same rate as rent has been increasing. So it helps the recipients of this payment less each year. And of course, it's also part of this whole, it's not very liberal as a measure, in the sense that it fudges with the market. So it's not a market-based solution. It falsifies the markets by driving up prices. But that's what you do when you can't build enough housing. You just hand out a couple of payments here or there. They are also, by the way, inflationary in nature, tiny bit, but it adds to the whole inflation story. So these are difficult things to adjust. And I think it's just building like crazy, which of course is harder than it sounds, because building means you need land, you need people, you need money to do this. None of those things are easily available at the moment. It's a tough nut to crack.
Now, one of the answers to this problem is many years before you plan to retire, to buy your home. And for many people, they buy, over 2 million Australians are buying investment properties as well. That's what our team at Metropole helps. So while we are not buyers, we're much more than just another buyer's agent. We help our clients grow, protect, and pass on their wealth and pass it on to future generations through strategic property and wealth advice. I'll leave a link to Metropole in the show notes. But whether you're a home buyer or planning to be an investor, why not have a chat with our team and get your ducks in a row? It all starts with having the right ownership strategies, whether it's buying a home first or an investment or growing your wealth. Simon, we help our clients grow their wealth through property. You help business owners and organizations by understanding demographics and what their future holds. Tell us a little bit about what you do.
Well, so the ultimate dream is that people are making smarter decisions about their life, their business, their constituents, if they're government. And the idea is, the more you know about the future, the more you are able to make smart decisions. And we are adding just one more perspective about the future. It's the demographic perspective. It's a perspective where we can, with reasonable certainty, talk about shifts in the near to mid-term future. And I think not taking the demographic perspective into account really limits you, because then
one of the few things you can rely on, Simon.
Yes, and of course, in times of economic uncertainty, global geopolitical uncertainties, and so forth, it is really even doubly helpful to look at the parts of the future that you do know, so that you're not completely flying blind when you strategize how you operate your business in the future.
Well, I'll leave a link in the show notes again so that people can get in contact with you at the Demographics Group and see how you can help with either consulting or presenting to their organization, their company, or their institution. Now, Simon, I said a few minutes ago in this chat about intergenerational wealth transfer, parents helping their kids into the market. I think more of this is happening now as opposed to happened in the past. People have been waiting for their parents to die to get inheritance, and we know there's going to be a significant wealth transfer as the baby boomers die off. But it seems like more parents are helping their kids early in the piece, the bank of mum and dad.
Yeah, and rightly so. So I'm, as an individual family unit, become the bank of mom and dad. You are helping the family unit so much more by giving your kids an early inheritance. It is fantastic. I'm always pointing to the bit of a fun numbers game there. Many housing websites, news websites have done similar exercises. If you compare two identical families, young families, and one of them gets $100,000 worth of bank of mom and dad loan, essentially an early inheritance, it makes the world of a difference. It is bonkers how big it helps. So I just want to remind people that I view a mortgage, bit of tongue in cheek, I view it as a poverty penalty. You have to pay a lot of money to the bank because you're not rich enough to buy that thing, the house, outright. And so if you look at a 30-year mortgage, every normal length these days, a 30-year mortgage at 5.3% on average throughout the whole life cycle, you pay exactly twice as much money to the bank than your mortgage value. So a $500,000 mortgage turns into $1 billion money paid to the bank over the lifetime. That means, though, if you, as the bank of mom and dad, give $100,000 to your kids, you give them $200,000 worth of money. That is insane if you think about this. And
Yes.
so every penny that you give them counts double in that instance. That's fantastic. And so you should make use of this as an individual family unit. But as a society, we must understand that those people who, for whatever reason, do not have the bank of mom and dad, that they are disadvantaged. And it has nothing to do with their own hard work, with their strategic positioning, their education, or whatever. This is just asset wealth that some people have that others don't. That's not a new phenomenon. That always happened, if you think about the royal family or something like this, who owns vast areas of land. They always had this asset-rich benefit of transferring wealth to the next generation. But this is very much true on a family-sized level as well. And yeah, it makes this makes it harder for some people. This is still a minority of Australians who don't have this, who will not ever inherit any assets, be this early or later in life. And that's, for those people, it will be very hard to make sure that they own a property in old age, so that they then do not have the housing cost in their retirement years.
Well, some people are suggesting, no, don't worry about housing, just put more into superannuation, a way of saving securely for your future. But in my mind, even with compounding, it won't give you the same level of security as an outright home ownership, Simon.
No, it doesn't. It might have done in the past. But you want to think about that superannuation was conceptualized 35 years ago when house prices were heaps cheaper. And rental costs were cheaper. So you go, okay, so in that scenario, if you were to retire in 1990 somehow, this will be just fine through superannuation. But you're not retiring in 1990. You're retiring, if you're retiring today in 2025, maybe in 2045, whenever it is for you. And so that's a different ball game. Yes, superannuation is a great tool. You get super cheap money, so you could tax a fraction of what you would usually be taxed on it.
At the moment.
At the moment, absolutely. God knows that will be changed in some way or another, but there will be some sort of threshold that will be $2, $3, $4 million, whatever. And unless you go over that, you just get super tax cuts there. But ultimately, the ownership of the house is still what avoids the monthly cost in retirement, and that. It's just too good to be true to get rid of that.
So, Simon, if you had the ear of government, what reforms would you push for?
Well, the first one, and of course, it's easy to say these things, but I understand that all of those things come with a price tag, and the government would need to make money to pull this off. The first one is the Commonwealth rent assistance that must grow with real rents. So if you want to keep this as useful as it is for the individual recipient, you need to link it to rents. So, okay, that's expensive, and if you escalate housing costs as a government, you escalate your Commonwealth rent assistance payments. And then, of course, secondly, you must also improve the amount of housing that is social and affordable in nature. That means each year you must move closer to that 10% number that I would say of the housing stock that must be social and affordable at the very least. And we are a million miles away from this. That means you need to build housing either yourself as a government, or you need to pay the private sector to build this housing, or you come up with some sort of innovative model to do this. But that's true. And then, of course, you think about, well, is there some creative work that we could be doing? Innovative ownership models. They think about shared equity schemes at the moment. I hear about people discussing the idea of land lease type models where you go, well, you actually only own the house, but the land is leased for your lifetime. And that leads up to a whole interesting philosophical discussion about, should we actually own the land? Is the idea of land ownership absolutely bonkers? Should we be allowed to own this? Should land always be owned by the collective that is Australia, that is the government, and you hand out leases to the individual humans, and then they can sell the house, the wealth that they built on top of this? I know that some people, when they hear this, they just think this is pure madness. Some people think this is absolutely fantastic, but I, of course, would always want to try stuff. So I'd say it'd be great if we take a small sliver of Tasmania or South Australia or something. We build a new city. It's all land lease. Nobody owns the land. You just own the asset, and then the asset gets sold. The asset will be a depreciating asset over time. So it will probably become very cheap to live in this area. Who knows whether this would actually be true, but I would want to have a trial city run in my fantasy world.
Sounds very interesting. Having said that, though, this general discussion, I think, has been sobering, but I think it's important, not just for those nearing retirement now, but for earlier generations as well, because retirement, the wealth divide in retirement is a problem that's only going to get worse unless we do something major about it now. Retiring without the security of home ownership are going to have more stress and more poverty. So I think there's some good takeaways for our listeners here, Simon. If you've enjoyed this show and you don't currently subscribe to Demographics Decoded, wherever you're watching or listening to this, please subscribe to our show. And please do Simon and me a favor, because we're trying to educate as many people as possible about the trends shaping their futures. So just share it with one person. That's all we ask of you in return for us giving you our time to help you. Simon, next week, I've often said during our chats, we're living in the best country in the world and the best time in history. And some people, I don't think, believe us. So I'd like to break that down further to actually understand why that could be the case.
So we'll convince you that Australia and the present are cool places to live in.
Fantastic. Look forward to seeing you next week, Simon.
See you next week.
This Demographics Decoded podcast has been brought to you by Metropole Property Strategists. We provide a complete range of services to help our clients safely create intergenerational wealth through strategic property and wealth advice. If you're looking to buy an investment property or your next home, why not have a discovery chat with one of our wealth strategists? Just go to metropole.com.au and explore your options. You'll find we're much more than just another buyer's agent. We provide a complete range of services, including property advisory, wealth advisory, home buying, buyer's agency, property management, renovations, and development management services. The team at Metropole will help you with frameworks that I've fine-tuned over 5 decades, and we've been helping clients with for well over 25 years. We're big enough to tip the scales in your favour, but still small enough to care. In between these Demographics Decoded shows, you can follow me on social media, and I suggest you also follow Simon Kuestenmacher. You'll find him regularly posting on all social media platforms. And thanks for spending the last little while with Simon and me. I hope you got some benefit from the show. And if you did, and you know somebody who may also benefit, please tell them about Demographics Decoded. There's a share button on every podcast app. I hope you're going to be doing them a favour, and you're definitely going to be doing us a favour, helping us in our quest to make as many people as possible aware of the demographic changes that are going to be shaping their future. And of course, if you don't currently subscribe, we'd love you to. And of course, any of the information that we've been sharing with you is general information, because we don't know your specific circumstances.